XRP just dropped to $1. If you're holding any amount right now, that number probably feels heavier than most headlines are willing to acknowledge. I'm not going to pretend this feels good. The price action throughout 2026 has genuinely been frustrating for people who stayed patient through the entire SEC resolution and who kept hearing about institutional progress that does not seem to translate into higher prices in the short term. This video is not about denying the dip or telling you everything will be fine tomorrow. It's about giving you a clear, honest framework about what XRP's price of $1.14 today actually means for your position. The drop itself is straightforward to understand when you look at the bigger picture instead of just XRP specific news. Two major forces are pushing risk assets lower right now. Don't forget to leave a comment. How many XRP are you holding and what's your price target for 2026? First is broader geopolitical tension, particularly around the Iran conflict and the ongoing effects of tariff policies that are increasing uncertainty across traditional assets and crypto alike. When global risk appetite shrinks, assets like XRP tend to feel it first because they still carry a higher perceived volatility than established markets. The second force is the legislative timeline friction around the Clarity Act. The bill remains in the Senate with approximately 70% odds of passage this year, according to current market data. That uncertainty creates a discount in current pricing, even while the operational side of the ecosystem keeps moving forward. So here's the framework I want every holder to internalize. The price you see on the screen today is the market's collective bet on how much to pay right now for cash inflows and utility that are still in the process of being built. This is not the final verdict on whether the long-term institutional thesis is broken or intact. 7 spot XRP ETFs already trading with a combined assets under management around $1.6 billion. The RLUSD stablecoin has reached approximately $1.6 billion in market cap and ranks as the third largest US regulated stablecoin. Ripple Prime has been live and clearing the DTCC National Securities Clearing Corporation since March 2nd of this year. These are not press releases or future promises. They are measurable, operational developments generating real utility and potential demand for XRP in payments and settlement rails right now. The cognitive dissonance is that so many holders are feeling comes from watching the catalyst stack up while the price moves from roughly $2.40 to $1. That gap between headline progress and actual price performance is the defining feature of 2026 so far. It's not unique to XRP. We saw the exact pattern play out with Bitcoin after the ETF clarity arrived. Institutional flows built steadily over many months while the spot price consolidated or even declined before eventually trending higher as traditional capital finished its onboarding process. XRP looks like to be in a similar phase, except it has to absorb macro volatility from geopolitics and the legislative process that moves much slower than crypto social media timelines expect. What this dip to $1 means for holders in the short-term price discovery is currently being dominated by factors that sit outside of the core XRP thesis utility. It means that market is applying a discount for ongoing uncertainty around when the full regulatory clarity will arrive and how broader global events will develop. It means that now sentiment and risk appetite are overriding the steady accumulation happening through ETFs and on-chain activity. That's painful when you look at it through your own position, especially if you've been holding for years through earlier volatility. It's also information. Tells us where the market's attention is focused right now. What this dip does not mean is that the multi-year infrastructure build has reversed or failed. The Genius Act is already signed into law and providing one layer of federal digital asset legislation. The XRP ledger itself continues to see developer activity around tokenization standards and lending protocols that create organic use cases for the native token. Partnerships are actively building real-world rails that will matter for demand over time. None of the developments require the Clarity Act to be signed next week or next month to keep progressing. The bill would remove the remaining legal friction and accelerate product velocity, but the foundation is already operating and compounding in the background. If you're holding through this dip, the practical framework I use myself is to separate what I can control from what I cannot. I cannot control geopolitical headlines or the exact timing of Senate committee votes. I cannot control how risk assets react to tariff news or regional conflicts. What I can control is whether I continue to accumulate gradually when prices are lower than they were earlier this year, whether my overall position sizes still match my long-term financial plan, and whether I'm focusing my attention on the data that shows institutional infrastructure continuing to build rather than refreshing the price ticker every few hours. On platforms like WEEX, you can actually get a massive trading discount, a huge bonus, by using my link in this video description. Many earlier predictions assume that institutional announcements and ETF launches would produce faster and more direct price reactions. The data has shown that institutional adoption in regulated markets tend to move on longer timelines than retail cycles are used to. Updating that expectation does not invalidate the direction of the infrastructure build. It simply changes how we mentally process the periods like the current move to $1.14. The holders who adjust their mental model to match the actual pace of regulation adoption are the ones more likely to stay patient through the phases. Holders who have remained patient through 2026 are not wrong about the underlying thesis. They're experiencing the normal volatility that comes with an asset class where regulatory clarity is still arriving in stages rather than all at once. The recent dip in the market is doing exactly what markets do when uncertainty is present. At the same time, the institutional data is the market doing what it does when real capital is positioning for the next phase of adoption. Both things can be true at the same time. Prices can be weak while the infrastructure continues to strengthen. This framework helps you separate the long-term from the short-term noise, the long-term data. Subscribe for coverage that tracks the price action and underlying developments without forcing either into simple bullish or just a bearish narrative. Comment below with how you're thinking about your own position size during this period and what specific data points would give you more confidence. Share this with anyone who's feeling the weight of $1 and needs a clearer way to think about what's actually happening. Don't forget, smash the like, subscribe, tap the notification bell. In summary, XRP trading at $1 reflects a combination of macro and geopolitical pressures plus a legislative timeline friction more than any fundamental breakdown in the institutional developments that are already live and operating. The 7 ETFs, ROUSD growth to $1.6 billion, DTCC integration, and expansive banking partnerships continue to build the foundation that matters over the next several years. For holders, the dip is painful in the moment, but it also is information about where the market attention is focusing right now. It does not erase operational progress that has already been made. Again, this is never financial advice. and only for entertainment. I'll see you in the next video.